Okay, it's time to look at the metals again. I warned people that we were getting late in the cycle, and I started to see a lot of analysts, predicting um, metals were going to the moon. They were never going to correct. When I start to see that kind of sentiment, you know, it almost never fails that we're approaching an intermediate top. I There's still a chance that gold could correct into a daily cycle low and then get one more bounce higher, but I tend to think we've probably put in an intermediate top here. One of the lines in the sand I'm watching is the 1520 zone right here. And as of this morning, anyway, we'll see how we close. But as of this morning, gold is back below that, and that's uh, potentially that signals a failed breakout. Well, let me widen the chart. All right, so this is what I'm looking at. This was a support zone as the bear market initially started. It was right in this 1520 to 1550 60 level right in here. And this is one of the rules that I uh, keep in mind all the time is that breakouts that occur late in an intermediate cycle usually don't hold. They don't lead to a sustained move. A breakout that occurs early in an intermediate cycle uh, often does lead to a sustained move. So here's a perfect example. Here's that resistance zone that we've been struggling with for um, 3 years at 1370ish. You can see we we broke out of that, but we did it very early in this intermediate cycle, week 3 or 4, I think it was. So that breakout, uh, had very good chance of a sustained move, and that is exactly what we got. This resistance zone, however, we're hitting this one 18 weeks into the intermediate cycle. So this one doesn't have good odds of producing a sustained move like this. This one has very good odds of failing, and that's what is happening this morning anyway. Um, this this breakout above 1520 is not holding, and is probably not going to. Again, there is a chance that gold could just come back down and give us a daily cycle low and then rally again, but I doubt it. Not at 18 weeks into the intermediate cycle. Now gold will give us a daily cycle low and then some kind of rally, but I don't think it's going to be a rally that produces a sustained breakout through this resistance zone here at 1520. Um, what I expect is probably going to happen is these daily cycle declines usually last 4 to 8 days. So, this is only day 2, so it's too early to be picking a bottom just yet. Um, I'm going to say maybe sometime next week we could get a bottom and then we'll get a bounce, but I think it's probably going to come up short. So if, for instance, let's say gold comes down to maybe just taking a guess here, but at 1470-ish level, actually let me put the Fibonacci's on here. Maybe we can figure out where we could. So the 38% Fib is a typical spot for a first leg down and an intermediate decline. So we could be looking at maybe something around the 1450-ish level for our daily cycle decline. And then we get a bounce, but one that probably cannot. Maybe it gets back up to 1520, but it can't get through it. And then we get a second leg down. And as I've noted many times in the past, second legs or intermediate declines tend to form as at least an ABC correction. So, this first leg would be our A, we get a bounce, maybe back up to 1520, fail to get through it, and then we get a C wave down. And I don't think it's at all unlikely that we're going to retrace back and retest that breakout above that 1370, 1380 level that capped gold for 3 years. I think is a very good possibility. This intermediate cycle is going to come back down and test that level, which would be the 61% Fibonacci retracement. So intermediate declines usually last 4 to 8 weeks. We're only on day 2 right here. We're gonna at some point we're gonna get a bounce, and the dip buyers are going to come in. They've been conditioned to think that gold only goes up now, just like they were conditioned to think that gold only goes down during this decline. And so they tend to buy too early. It's probably going to be sometime in the middle to end of October, maybe even into November before we get our bottom. So you can just be patient. We are starting a bull market, but all bull markets have intermediate corrections. They have to cleanse the bullish sentiment that builds during these intermediate rallies. They don't make lower lows, so you get a pattern of higher highs and higher lows. So we should expect this intermediate correction. It's just a natural correction to clear the sentiment, build the fuel for the next leg up. So this correction should hold well above this low here. Two potential targets are the 50 and the 60% retracement levels, and then everybody will get bearish again, and then that will build the fuel and set the stage to break through this 1520 to 1560 resistance zone on a sustained basis. We'll more than likely will rally up and we'll hit this level early in an intermediate cycle. And like I said, rallies that break through a resistance zone early in an intermediate cycle produce sustained moves, just like this breakout here early above the 1380 zone produced this sustained move. So let me move on to silver real quick. All right, so in my last video, I noted that, these kind of a parabolic structures, they go straight up, they also end up going straight down. This kind of a move, this vertical move, it happens at the end of an intermediate rally, and this is symbolic of a bunch of dumb money retail traders piling into what they think is a bulletproof trade, and then as the institutional traders, the people, smart money that know, that understand this is an ending move, not a beginning move. So they're taking profits into this. And then once you lose the institutional money, the retail traders are not able to hold it up. And the profit taking starts. And then everybody that's buying late, they quickly, are negative on their trade. And so they end up stopping out. And that starts to snowball as all these retail traders start to get stopped out of their positions. It increases the selling pressure, and so you can bet the farm almost that this vertical move is going to be completely erased. All of these retail traders are going to get taken out of their positions, and but the same thing is going to hold for silver. This is just a profit-taking event. It's going to turn everybody bearish again. It's going to set the stage for the next leg up. Silver is not going to go below this intermediate cycle low here. It'll bottom somewhere in here, probably between 17 and I would guess $16. I would think this would act as support. But we're in the middle phase of the bull market. So, all of this talk about corrections being mild this is not how it's going to work. The middle phase of a bull market lasts many years. The market climbs a wall of worry. Intermediate corrections have to be severe in order to keep that wall of worry intact. And so You know, the pretty clear at this point. The buying stampede is over. I remember back here, I had noted that I didn't think that a buying stampede would be over in 2 days. It usually lasts 7 to 14 days. This one lasted 8, I believe it was. But you know, once the buying stampede is over, once you start to get the selling, then that's probably it. They don't usually resurrect themselves after the um, stampede comes to an end and we start, the profit taking event. So more than likely, we've uh, found an intermediate top. It's time to be on the sidelines. You don't need to be in a big hurry to pick a bottom. As I've said before, uh, intermediate cycle declines, especially ones that occur during the middle of a bull market, the middle phase of a bull market, will usually push the weekly stochastics back to oversold. So let me go back to that gold chart. All right, so you can see the stochastics is just now rolling over. We've actually got a bearish engulfing candlestick that's forming this week, barring a huge reversal today. But stochastics is just now rolling over, and I would expect it's going to come down and it's going to test, or it's going to reach oversold, just like it has at virtually every other one of these intermediate declines. So we've got a while yet before it's going to be time to buy. I like to buy when price is oversold and the stochastics are down here, and I want to sell when price gets overbought uh, up here. So right now, um, not the time to be picking tops, and I think we've got typically 4 to 8 weeks for this for the stochastics to cycle back down to oversold, and then we'll be ready to buy again. So no big hurry to do anything in the metals, uh, probably for a month or two.